Hello, good morning, and here I am with my Dunkin' Donuts coffee this morning. I didn't have it the last couple of days. There were a number of issues why, but now I have it again this morning. And it is a gorgeous day. The sun's just coming up. You can see it behind me as the day dawns. It is January 13th, 2022, and I am Kenny Polcari, your host of the party. And what is it today that we need to know, right? What's going on? What happened yesterday? We saw that the CPI report was much hotter than expected. Right? We're back to 1980 style CPI, yet yields didn't really move, which is a little bit curious. We'll talk about that. The PPI is due out at any moment, right? Estimates as high as 9.8, but will it pierce 10%? That's the question. The dollar index fell yesterday, helping to send oil and other commodities higher. Earnings season officially starts tomorrow. Financials in focus, right? So that's going to be hopefully changing part of the conversation. Talk of now 4 rate hikes is now the norm. So just hold on to that. And what are we having for dinner tonight? I'm giving you the chicken soup and a chicken salad sandwich, but we're going to get to that at the end. Inflation remains hot. CPI year over year up 7%. Ex-food and energy up 5.5%. Ahead of the estimates, right? All while real average weekly and hourly earnings fell by 2.3 and 2.4% respectively. So make sure you understand this. Prices are rising and wages are falling. How's that working out, right? Expect workers to demand even higher wages to reverse this phenomenon, which will cause businesses to raise prices even more to pay for those higher wages. And so we run into that wage price spiral form of inflation in the late 1970s, right? Something I have alluded to in some of my prior notes. We're back at inflation rates that were alive and well under another Democratic president, Jimmy Carter. Remember him? Inflation peaked at 14.8% in 1980. The Dow was trading in the high 800s. The oil market was controlled by the Saudis, and the Iranian Revolution held 70 Americans and the country hostage for 444 days. Remember that? Then Fed Chair Paul Volcker pushed interest rates as high as 19% to try and crush inflation, which then caused a deep recession, which caused stocks to plunge. But ultimately, we saw both inflation and interest rates fall sharply by the summer of 1982, and the greatest bull market this country and the world has ever known was born. Tuesday, August 17th, 1982. Now look, I was 20 years old. I was a summer intern working on the floor of the New York Stock Exchange when that happened. I will never forget that day. It was incredible. Call me to get a first-hand account of what that day was like, right? The Dow rose 4.5%, which was only 35 points. Volume quadrupled from 30 million shares on Monday to 138 million shares on Tuesday, all by hand. Pen and paper, was unbelievable. But I digress. So back to 2022. The CPI revealed that prices for nearly everything are going up, and that's driving the inflationary surge higher. Add in the supply chain issues, and it only gets worse. Wall Street's parading around every economist to try and ease the talk of out-of-control prices, while the Fed keeps telling us that they expect inflationary pressures to ease as supply bottlenecks clear. Great. The only issue with all that is that no one's putting a time frame around it other than say we expect inflation to fall. When? In 2023? In 2024? And after the whole transitory call, many are now questioning the Fed thing, not paying attention to what the Fed has to say, because the conversation in 2021 proved to be a massive mistake. They kept telling us there was nothing to worry about, that they had it under control, that it was just transitory. They missed the boat. The signs were flashing, but they kept feeding the beast, even when the groupthink was telling them that their academic thinking was incorrect. Well, look how that conversation has changed in a very, very, very short period of time. We dropped transitory because Americans didn't understand the word. Remember when Jay said that? And suddenly, we're going from this gradual tapering and then a consideration of possible interest rate increases. And then finally, in 2023, maybe we could talk about the balance sheet reduction. Suddenly, everything has to happen at the same time because inflation is spinning out of control. Oh, and by the way, expect at least now 4 rate hikes in 2022. That's up from maybe 2, possibly 3. Has now turned to 4. And the increment of the increases is also now in question. Is 25 basis points is no longer the default move, and that is key. So pay attention because you can already hear that it's coming. The growth trade under pressure, and that makes sense, while the value trade is alive and well, and that too makes sense. Cyclical and large cap value names are the place to hide. High beta names continue to be sold. Some are off as much as 70%, yet are still not finding many buyers and continue to move lower, and that makes sense as well. My question is, when will the broader market begin to reprice? With all the talk of 4 rate increases now and a swifter balance sheet reduction, stocks should be under a bit more pressure. Is the market telling us that it doesn't believe what the talking heads are saying? Or is the Fed continuing to stimulate the economy by going in the back door? All questions, all very good questions, and ones that need answers. At the end of the day yesterday, the Dow added 38 points. The S&P was up 12. The Nasdaq gained 34, and the Russell gave up 18 points, while the transports lost 20 points. 10-year Treasury curiously ended the day yielding 1.75%. Not much it wasn't a big move. When it should have been actually much higher with the talk of 4 rate hikes and the bigger increments and the hot inflation. The VIX, which is the fear index, is closer to the lows, which means that investors are unfazed by all this talk. Have the talking heads convinced us that the economy is so strong that there's nothing to worry about? I think you got to be careful. Doesn't mean panic, just means be careful. 4 rate hikes were not the norm, remember, until Goldman put out that piece that hit the tape on Monday morning. And now look how many Fed members have suddenly embraced that mindset. It's incredible. Last week they were cautious to say that maybe we're going to get 3. But after they got Goldman to produce that latest research piece and put it out there, now they're all finding cover for that more hawkish, aggressive stance. Powell, Bullard, Messer, Hawker, Daly, Kashkari, Bostic, Brainerd, and Waller all jumping onto that bandwagon. In any event, it is what it is. And today we're about to get hit with the producer price index. And the estimates call for plus 0.4% month over month and up 0.5% ex food and energy, while year-over-year numbers are expected to be 9.8% and 8% respectively. Now, 9.8 is very close to 10%, a double-digit number that should shock the markets if we get it. But expect that the talking heads will try to divert that conversation, blame it on COVID and then supply chain, and then try to move on, telling us, that it's temporary. Just as they did yesterday, telling us that the CPI report was generally in line. So there should be no surprise. Nobody should worry. So the clock is counting down. We're also expecting economic reports on initial jobless claims of 200,000 and continuing claims of 1.7 million. Delta Airline just reported their earnings. That stock is up 2% after reporting a beat on revenues and profits and reaffirming the bright forward guidance, right? There's more to follow on that, so expect to hear that all day. Just another thought, though. Does anybody find it curious at all that businesses are having a really hard time getting workers, yet airlines and hotels and vacation spots are on fire because Americans want to get out? So you're happy to travel and expose yourself to all kinds of crowds, yet you can't go to work because you're afraid of getting COVID. Seems to me that there's a disconnect there, but that's a whole other conversation that we should have. But one way or the other, that is also what it is. U.S. futures this morning are flatlining ahead of today's PPI report. Dow futures are up 40, S&P's up 2, Nasdaq is now negative, and the Russell's up 1. Little Brainerd is on her way to Capitol Hill to appear before the Senate Confirmation Committee. And no one expects that she is not going to become the next vice chair at the Fed. She will, that's clear, but it's just all, pomp and circumstance. Healthcare was the only sector yesterday that really ended the day lower out of the 11 S&P sectors. The XLV fell 0.3%. The best performer were basic materials. XLB up 1%. Consumer discretionary rose 0.7%. Tech, industrials, and financials all rose about 0.4%. The growth trade was up 0.5%, while the value trade gained just 0.1%, right? But the value trade is ahead year to date. Disruptive tech, those high beta names, continue to get hammered, with ARC down 2.8%, not off to a very good start. I really wish Kathy Wood would come out and talk about what's going on, or what from her perspective. The action today is going to be all about the PPI and much more about the Fed's response. If the PPI pierces 10%, and there's a very good chance that happens, then expect the conversation to really heat up about the pace of tightening. And then maybe, just maybe, the broader market will see some repricing. Tomorrow's the official start of earnings season. Financials are the first to take the runway, and financials are expected to be one of this year's top performers. So pay attention. In any event, for anyone not to expect that valuation models need to change, I think is very short-sighted, right? They have to change. It's just a math problem. So stick to your plan. Look to invest new monies into sectors that are going to provide some safety and some defense. Oil this morning is trading at 82.60, up again. Part of this is the demand issue, and part of this is the collapse of the dollar. Yesterday, you saw the dollar fall by 1%, and today it's down again, testing the intermediate term trend line at 94.65. Remember, a weaker dollar results in higher commodity prices. There's this inverse relationship. And higher commodity prices means what? More inflation. So there it is again. Another log in the fire. Cryptos this morning are finding some stability, right? We see Bitcoin trading at 43,600, up just a little bit. Ethereum's trading at 3350. But do not expect the volatility in the cryptos to be over. If today's PPI report sees the market come under pressure, then I would expect money to also move out of the crypto space as well. Just nervousness, right? But again, if you're in it for the long term, then there's an opportunity. Then there is an opportunity, I guess, right? You have to decide ultimately what level of risk you want to take. European stocks are a bit lower this morning as well. Investors, they're digesting the latest CPI report, and they're also awaiting today's PPI report. Earnings also are set to begin across the region, so that's going to hopefully divert some of the conversation. The S&P closed last night at 47.26. The PPI report is only about an hour away. If it's hotter, then I would expect yields to move up. But I also expected that yesterday. But the CPI, like they said, was mostly in line. So maybe they blunted that move. But in any event, I guess what happens is going to depend on how they spin it, right? While hot, it will surely be described as less hot than it could have been, and that's going to be the silver lining, right? But if it appears as 10%, that's not going to be less hot, so pay attention. In the end, watch what the 10-year yield does, right? Earnings season is about to help change the conversation, and while it's expected to be strong, it's not going to be as strong as it was last quarter, but we know that, right? But it is going to be all about the guidance and how many of them are going to start to point to COVID, and it's COVID's fault, and it's this and it's that. Right? I think you have to kind of put that aside and just pay attention to where the economy is and what the guidance is. Remember, text the word invest at 21,000 on your cell phone to get my digital business card. Feel free to download it. It goes right into your phone. You can send me off an email or a text. I'm always happy to engage and talk markets, planning, thoughts, concerns, ideas, anything really that you want to talk about when it concerns the markets. You can also follow me on Twitter and TikTok at Kenny Polcari and on Instagram at KennyP1961. So today I'm giving you chicken soup because a friend of mine got sick with COVID. He put it out there that he was sick, so I said, I'm going to give you my chicken soup. So here you go. It's very simple to make. You need 2 bone-in chicken breasts, skin on. You need 4 bone-in thighs, skin on. 2 large Spanish white onions that you're going to chop, a bag of shredded carrots, a full celery stalk, which you're going to chop, salt and pepper. You need 2 packets of chicken bouillon, and you need water. It's relatively simple. You're going to put that all in a big enough pot, right? You want to fill it with water almost to the top so it's all covered. Bring it to a boil. Season it with the salt and pepper. Once it's boiling and you season it, turn the heat down to simmer and just leave it there to simmer for 2 hours on the stove. After about an hour, some of it, the steam is going to cause some of it to steam away. So add another full glass of water back to the pot just to bring it back up. After about 2 hours, turn the heat off. It's all cooked. Take the chicken out. Allow the chicken to cool separately. Then take the skin off, remove the bones, then shred the chicken using either a knife or 2 forks, just pull it apart. Now, using both the white breast meat and the dark thigh meat, put half of that shredded chicken back into the soup and use the other half to do what? You're going to make homemade chicken salad. It's the greatest. Now, you take the balance, season it with salt and pepper, add mayo and a tablespoon of whole grain mustard, like the grainy mustard, not the French's yellow mustard. You want like whole grain mustard. You can dress it up also with diced carrots, red onion, and chopped celery as well if you want. Make yourself a soup and salad for lunch, a soup and chicken salad sandwich for lunch. Nothing better. And if you don't feel good, it goes right to your tummy and it makes you feel all warm and cozy. In any event, look, warm and cozy down here and not so worried. It's going to be 80 degrees today. Warm and cozy up in the Northeast. You're going to need that. So the chicken soup is going to be good. In any event, it's going to be another great day. So stay tuned. Stay on your seat. Stay awake and take good care.